Alright guys, good morning. Let me know that you can hear me. I think your swim is lagging here. Trevor, we had a halfway back long that blew out of targets that began extensions. That's how the fib sequence works. That's how I teach it in the fib course. Yeah, oil has so far been front run by 6 ticks on that 51.38 major support. If we break above 51.81, I'll look for a more aggressive entry. But right now I'm looking to buy that 51.30 zone, 51.38. Nasdaq is the strongest index this morning. Gold is going to have an extension here. It comes into play at 1309.9. Yeah, I mean, Trevor, if you get the fib course, a lot of your questions will be answered regarding to. I mean, there's just, I mean, it's just a deep 8-hour plus lesson, you know. I can answer a question here or there, but if you really want to get after it. Should get a breakdown at 2710 here, at least, and then maybe 2706. New low in oil. Still looking for a move down here. Gold's going to be trading up into its 1310.7 extension here. S&P is most likely going to come down and fill this gap completely. We were up 10 points, we're up 6 now. Nasdaq's gonna break down here. We should get trade 09.5 on a breakdown. That should just be the next smaller level. The Russell has broken through this pretty well. S&P's just kind of hanging on. We could trade as low as like 06. The 38% retracement of the extension gets a little bit of a bid here, not a level I would buy, but just watching that reaction. Bid for like 4 ticks to the tick. I'm looking to short into oil. I'm looking to short into gold. I'm looking to buy oil. There's the breakthrough lows in the ES. Do would you wait? No, I mean I would not take crude. If anything, I would, if I wanted confirmation in crude on this higher time frame to say, hey, I'm right, I just look at the price action. Like right now, I would want to see it really break above like 51.70. We could continue. This thing is such a big target. To me, this is a swing trade because the target here on this move in crude, if it hits targets, which is it would be quite something for crude to do. That's over his $6 profit target. It's $6,000 a contract. So I'm not really concerned too much with the smaller time frame price action here. What I want to see, like to confirm the upside bias, we need to get back above 51.74. We can get back above 51.74, then that confirms this level, at least on the smaller time frame. All right, there's that 2709 half in the S&P I said we'd break down to. I'd be willing to short up here at 13 half just for a quick move. Good morning, Lou. Awesome, Makari. You'll love it. I got those painters on my roof again today. So a couple levels here, that 09 half, quick 2-point bid in the S&P. This extension in the Russell at 1507.1, we've bid 1.3 points so far. We'll see what happens when we get to 13 half, if there's still sellers coming on. Major League Monster. So in this, sometimes I take an entry before I see a trend break in the other direction if I think the level is big enough. Like in this case in oil, I bought this halfway back long because this is a major level for me. Like this 51.38, like I said, it's got a $6 upside profit target. It's the low of Wednesday. I think it was a Wednesday on the 28th. And if I run this to target, I'm getting $6,000 a contract, which is huge. So I think this is a pretty significant support. Even if I just ran it to the next halfway back short, that'd be 52.32, which is like $700 a contract. So even if we just rallied up to that, but what I look for to say, well, am I going to be right or am I going to be wrong? You know, this is a pretty big hourly candle down right now. That range is $1.14. Our average is 36 ticks. So I would go down to the 5-minute chart and just look at this price action. And really, if there's buyers here, we should get back above. Now, if we don't get back above these levels, that's what I'm thinking. Probably can go lower. So even though I'm already long, I know what I want to see for me to be like, okay, well, I'm long and right. Right now, I'm just long. I don't know if I'm right. I don't know if I'm wrong. I'm a little bit above my entry. None of this action here is really mattering to me. But if we trade up to 51.65, get rejected, head back down to 51.38, and back to my entry, I'm not going to be looking to hold on to my position. Might even try to reverse it and sell into the low. So it's, you know, paying attention to the smaller time frames inside of the bigger time frame levels and how they trade around them. I'm still looking. I would short 27.13 here if the S&P can get it. I got my next entry short there. Otherwise, I think we can just continue to grind lower, possibly to 27, possibly take out the overnight low. Let's take a look at the value areas. We're not even close to value area high yet. Value area high is all the way at 26.9975. That's 10 points below us in the S&P. So I would love to see a rally in the 27.13 to sell into. I don't know if we're going to get it, but yeah, a lot of times, Kaylin, though, even though we pierced it, it doesn't mean anything to me. A lot of times we pierce levels and then reverse. Like, it's almost like if we pierce it and reverse, it's actually better. Because that means everybody got shooken out. I mean, look at a chart, you will see, if you look on a daily chart, you'll see so many times where we get above a high or below a low, and then just reverse. Like, it's one thing if that low gets pierced and then we just like rocket below it, which could happen. But like, here's a great example. I think this low got pierced by like a tick. I can't really tell here, but it looks low if you do. Kind of hard for me to tell, but it almost looks like this low got pierced by a tick or two. The first day of the year. And then just ripped. So I actually like to see lows pierced and then reverse. It's really arbitrary to say if it's pierced or not. Especially when you have this many days of separation. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You know, here's an example. Even though it's just on the daily chart, we have a low, and the next day we take it out, and then we rally at $3, or no, $2. It's like a low, take it out, rally $2. So it doesn't really matter. It's just a low, we take it out, whatever. The only thing I'm asking is, can we get back above 5180? Or 5174 specifically. If we get back above 5174, nothing else matters. If we don't, then I think we're gonna sell. Thanks, Kraut. Half an hour into the day here. And there's oil getting back up 51.65. It's just an opposing 5-minute move. If it breaks, then I'm going to feel really comfortable being long. If it holds, I'm going to be, you know, debating what to do. And then there's that 27.13. So this holds, we're going to get down to the 2706. I mean, just perfect plays there. 2713 trades, instant drop, 2706 is your target. Already up 1,400 bucks in oil. Everybody's afraid when things are selling off, and everybody's, you know, confident when things are moving higher. Sometimes you just got to trust your levels and then just manage your risk. Makari, I don't know where that link is. I posted 2 different ones, but you probably look back in the chat. So yeah, based off the reaction, like the faster we come off of a level, typically the better it is. So for example, this oil level 51.38, you know, you want to really see I like to see the first 5-minute bar. So that, you know, we did go through it, but then we closed back above the next 5-minute bar, traded that support level to the tick. That's a good reaction. Now, when the reaction is slow, that's typically when I'll begin saying, okay, well, I was looking for 6 points on this target. Like, I'm just going to look for 2 here because it's a crap reaction. I just think we can, you know, trade 27.13 to say 27.11. But if we have a great reaction, but as soon as you start like consolidating, that's when I start just looking for smaller targets. When we're moving fast, my targets, I will stretch them out. But when we start slowing down, then I'm like, do I really want to be trying to go for 12 points here? We're not moving anymore. Over 40 ticks from that entry level in CL. really nice reaction in the Russell here. And so, you know, if we break above this resistance, it's because we traded 2709 half. Yeah, but honestly, what I'd be looking to do with this oil trade, I think my entry is really, really good. And I would think, you know, we were front run on this halfway back short from Friday, so I would not be surprised to see oil retest 53.04 before, you know, coming back down here. Now, I could hold it all the way up there, or I have the option if I want to swing this over the next month. If I want to stay long, you know, the remainder of February, there's a possibility we could rally all the way to profit targets, which would be like a $6.50 move. So, you know, that's $6,500 per contract. And that takes a lot of patience to hold. I don't know if I have that much patience, but I picked up 5 contracts there. So it's basically would be a $30,000 trade, and I was only going to risk about like 20 ticks there. So it's like those are the trades when you can hit them. You risk 20 ticks, it's $200. You get paid $6,000 on that $200 of risk. That is huge. It's huge. It's a huge return on your investment. ATR, all it is a mathematical measurement of the range. And then you have to decide, you know, like if you're going for, there's really like, there's no science It's just the ATR is the average true range. It doesn't mean that the next bar is going to be the average true range. It's just telling you, it's a lagging indicator. It's telling you what happened. It's not a theory that the highest gain would be 1 ATR. That's not. It's just like if we have a 37 point ATR, if you go double that ATR, that's called a 2 standard deviation move. So it's further outside of the bell curve of what should happen. The larger the target you're looking for past the ATR, the more unlikely it's going to happen. I'm sure there's a mathematical calculation in there somewhere. Like, you know, if you looked at a bell curve, but I mean, I don't really pay attention to that stuff. But if you're a statistical genius and you want to figure that out, all power to you. I just use it to say, am I being realistic with my profit targets? Gold's about to get up into this 13.10 to 10.7 resistance that I have. Battle of longs and shorts in this S&P. If gold does not stay below this level, we're probably going to get all the way up into 13.13. If it holds, we're getting new lows. Once again, you want to watch the reaction out of it. S&P has just moved into a consolidation here between 27.13 and 09.5. It depends on the instrument you're looking at. So if I'm looking at, it's whatever the smallest incremental value is. So 37 ticks in oil, right? Gold. So gold right now, it's at a 5-minute chart point, it says 0.89. That basically you round that up to 0.9. Gold does not go 2 decimal places. It's 1 decimal place. I think you're really just, you're overthinking it. Caitlin, I don't really. I mean, I'll look at it on occasion, but I personally don't like using correlation If I'm right, I'm right. If I'm wrong, I'm wrong. When I start looking at correlations, I'm wrong more than I'm right because I don't look at the price action and I just have a bias because of some correlation. It's like the indexes I'll watch, just what's weak and what's strong, but I don't like the correlation of all the other markets because I find myself just often screwing myself out of positions, not covering what's really important, which is just price. I mean, but if you find that it helps you, then use it. I don't find that it helps me. That's really the question you got to ask yourself with everything you're using. Does it help you? If so, continue to use it. If it doesn't, forget about it. Nobody's making you use anything. All right, we're breaking this level here in gold, so I'm gonna cover. Probably gonna get up to that 13.13. But I also want to pay attention to any sequence we got out of lows, which there's an extension. Yeah, Wolfspec, I actually have the sheet built, so I'll do that. We are coming off this 2709 half back at resistance. The Russell has had the best reaction. That gold is ripping now. Shorts are getting squeezed. 2706 trying to complete here in the ES. Here's the full 50% retracement long of the Dow. If this doesn't hold, it's something to watch. Like I said, we couldn't get above that 61.8 for the regular trading hour session. It's just another level. You're gonna have reactions off every level. It doesn't make me worried about it. You know, if you were long down at lows and you're looking for a shorter time frame trade where you just want to scalp out, you could have looked at that and said, hey, you know what, that's probably going to be resistance, I'm going to take that. But I'm not looking at that level because my idea of this trade is much bigger than just a day trade. If this is a day trade for that, then I wouldn't be worried about that because I know that that level's there. I would be looking at for a profit target. Don't be worried about levels after the exit. Just know that they're going to be there and take profit. That doesn't concern me because I'm looking for so much of a bigger target to trade. But if you're trading on a shorter time frame, plan on being out of the day, and we rally, you know, basically rallied, call it 60 ticks there off that support level, and we run into a halfway back short for the day, like probably a good exit for a day trade. 60 ticks real quick, but I'm not worried about it. As far as supports, I'm looking at 2703.75 in the ES. 2706 trades. Short completes. There's another. There's gonna be another one here at 2710. Or we're gonna trade down to 0375. '06 trades at 2710, quick 4 points. Coming out of this 50% retracement long, Dow is still holding. I still think we could possibly make another low, but the Russell here is really acting well. Strongest market. Rallied, held a halfway back long. Alright guys, it's a little past 9:30 here. If you guys have any more questions for me, let me know. I do not have a set stop loss in oil. Probably going to get up to 11.5 now here in the ES. Russell's the strongest market. The weakest on a percentage change is the Dow. Oil's held a halfway back short here for the day. You got a long at lows and a short at highs. I'm going to look at this 11.5 here as resistance. Support below I'd like to see in the S&P trade at 0.375. But that's going to wrap it up for me here today. Hope you guys enjoyed this morning. Catch you guys in tonight's video. Everybody take care and have a great day.